You're welcome to a live session today. Hope you're all doing great. Just give it a minute. Okay, you're all welcome to our session today. My name is Ken, and I'm your host for today. And today we're going to be talking about let's talk stock and ETF. Right? So we're going to learn about stocks and ETF, how to invest in the stock markets. Right? It shouldn't be that difficult investing in the stock market, right? So we're going to be demystifying that today, making it, so simple that it should be or it has always been to invest in the stock markets. No need to go, you know, juggling to invest in the stock market. It's as simple as A, B, C, D. All right, please welcome everyone. We're waiting for you. Please welcome. Okay, hope you are ready. Okay, I'll be starting now. So if you're just joining in, you're welcome. We're going to be learning about how to invest in the stock market today. Last time we did a live and we talked about how to invest in the stock market. And we talked some how to do some preliminary analysis on how to invest in the stock market. And today I'm not going to bore you with all of those difficult stuff that most people said they didn't understand. Today I'm going to make it simple, all right? But first, before going there, we're going to just show you how you can actually invest in the stock market. It shouldn't be that difficult. All right. I believe you're all here now. Please, if you're here, give me a thumbs up. Let me know you're here. Okay. Hope I can see you. Okay, so last time we talked about our stocks and ETF. Today, we're going to be answering real question, how you can actually invest, grow, and protect your money without guessing. And if you can stay to the end of this session, I'm going to be showing you how I make money from investing in the stock market, which is something that most people do not know that exists in the business of investing in the stock market. So please stay glued. Please look for a chair and sit properly. If you have a popcorn, grab that because we're going to be going on a long ride today. Okay. So how to invest in the stock market? So a lot of individuals want to invest but don't know how to. So let's simplify it. But first, before you can think of investing in the stock market, if you have a debt, if you're owing and the interest is big, let's say 20%, 30%, please pause the investment, go and pay off your debts because the stock market will not give you a return of 20, 30%. Sometimes it might, but stock market has always proven to give you within a range of 10 to 15% return in a year. So if that is the case, why investing when you have little money, or not just when you have little money, when you have debts of running to 10%, 20%. So you're actually robbing Peter to pay Paul. So the best is pay off your debt before investing and build an emergency fund. Now, how to invest. Today I'm going to be practical with less talk, all right? So if you're in Canada, I know that we have audience in Canada, in UK, and US, Middle East, and other part of the world, even in Nigeria, because we're actually live on Facebook, on TikTok, and on YouTube, right? If if you are in Canada, there's an account called TFSA, tax-free savings account. It's an account where you can invest your money and the returns is tax-free. All right. Then we also have another account called RRS, which is retirement savings account, as a retirement savings plan, which is RRSP. So this is tax deferred. What it means is that you will only be taxed when you are taking the money, which is when you are retiring. So it starts deferred. So you can invest in these accounts. We also have that of, other accounts, which I won't be able to mention that because of, I need us to also talk about accounts for that country. So for if you're in US, we have the Roth IRA, we have the 401k. Then if you're in UK, we have the stock and share ISA, we have the SIPP account. Then if you're in the Middle East, I know that there are countries in the Middle East do not really, tax your account for investing. So please take advantage of that. So we have general investment account, which is standard investment account. Tax depend on countries. All right. Then the end of service benefits. So not an investment account, but but a key for long-term planning. All right. So this is for those in the Middle East. Then for the folks in Nigeria, I will just a minute. So for the folks in Nigeria, there are, you know, uh okay, let's for the folks in Nigeria, you can actually invest in your accounts, all right, and get benefit from it. But once I'll mention for the folks in Nigeria when it comes to when I start talking about the brokerage accounts, all right. So, like I said earlier, for those in Canada, invest first in your TFSA account. For those in US, invest in your IRA. For those in UK, SIA. Then for those in the Middle East, most times prefer investing in the global market. So it's something that you think about if you are not investing in the global market. So smart investors don't just invest, all right? Smart investors, they invest in the right account because it makes no sense for you to make profit from your investment and that profit is going to be taxed, taking maybe 20%, 50% of the money that you have made as profit from your investment. So it's best that you consider investing in accounts that are not taxed. So now I want to invest. How can I invest? So if you're in Canada, there are platforms that allow you to invest. Platform like Questrade, Wet Simple, they allow you to invest in the stock market. There are others, all right? Then for those in the in the US, uh, Fidelity Investments platform, which is a brokerage account, Charles Schwab, Rohim Bod, Robin Hood brokerage. So they are all brokerage accounts that you can open and they will give you the access to be able to invest in the stock market. Then if you're in the UK, you will have the Trading 212, Hargreaves, London, Free Trade. They are all a brokerage account. Then if you're in the Middle East and you want to invest in the stock markets, they will have Sawa, we have the eToro, we have Interactive Brokers. If you're in Nigeria and you want to invest in the stock markets, I know there are popular ones which all of you know, but I'm going to be mentioning ones that are not that popular that you guys might not have known. One is the Meristem Securities, Cardinal Stone Securities, Stanbic IBTC Brokerage, United Capital Securities, AfriVest Security. So these are all brokerage accounts, all right? So that are established just like the way you have banks in Nigeria. Then we have the apps that are popular that you know. We have the Bamboo, we have the True, Chaka, uh, RiseVest. So these are all brokerage accounts that you can, open with them. You can open account with them to be able to invest in the stock market. So the next question will be, why does people lose money? All right. So the next question will be, why does people lose money in the stock market? The number one answer is following hype. That you saw so many videos, content creators making videos. This stock is doing well. This stock is something that you have to invest in now, invest in now. And because the hype is so much, you start investing in it, following hype. Then the next one is investing without strategy. Investing without strategy. That is how you can lose money in the stock market. Before you invest in the stock market, you have to develop your own strategy. Okay, this is how I'm going to invest in the stock market. The next one is this emotional decision. You don't just wake up because you see the stock is going down or the market is collapsing. Oh, and you want to leave. No, it's not done like that. You have to be emotionally balanced to be able to invest in the stock market, right? So impatience is another one. Impatience is another one that can make you to lose money. So investing is not gambling. Investing in the stock market is not gambling. You must follow structure for you to invest in the stock market. So during our last session, I was able to show us how to pick individual stock, how to be able to do some preliminary analysis to make a decision on how to pick or why you should pick a particular stock to invest. So today I won't go there to start giving us those details because I believe that video is on YouTube. You can look for it and watch it. All right. So you can, for those in TikTok, you can just search the Thrift Cycle on YouTube and you're able to see the video. So, but if you must pick an individual stock to invest, there is a question I always ask myself. If I am being given this company to own or to buy this company, would I want to invest my money in this company? If my answer is no, if there's uncertainty in the response, then definitely I won't invest in it. All right. So the company has to be a strong company with a good revenue and a good profits, all right? Then it has to be an industry that is always growing. And the industry that is always growing, don't just go and put your money in any and anyhow industry. AI, healthcare, energy, and others, they are always growing. The space is there. So many. So you have to be, and the next one is be consistent with what you're doing with your investing. Don't just work on, on hype. The videos you see on YouTube, most of those guys, most of those folks you see, they're not doing them because they want to guide you. They are doing them because they want views. So every day they have to make video. So imagine if they have to make video every day. Imagine if they have to make video every day. So they have to look for a particular instrument to talk about. All right. So that is why you have to be careful. So ETF is another way you can, invest smartly without the stress of looking for what to pick and what not to pick. All right. ETF is the smartest way to invest in the stock market. I'm going to be comparing the both ETF and individual stock. So if picking a stock feels stressful, ETF do the work for you. The benefit of investing in ETF is diversify investment, lower risk, beginner friendly. So you don't need to stress yourself and trying to pick which stock is going to do well, which stock is not going to do well. With ETF, you kind of have a lower risk as compared to individual stock. So there are example of ETFs, the S&P 500, as VOO, the QQQ, what's it called? SIU, which is so S&P 60 ETF. So there are many of them. I'm not trying to recommend a particular ETF for you to invest, but I'm just saying that there are many of them that you can, leverage on. So stocks and ETF, what is the, simple truth about it? For stock, the risk is higher. For ETF, the risk is lower. For stock, there is higher return potential. But for ETF, it is, kind of steady. Then stock require research. ETF is beginner friendly. So if you are investing in the stock market and you don't know how to do it, you can just start investing in ETF. No need to go stressing yourself looking for individual stock to invest, whether it's going to do well or not going to do well. As you grow in your investment journey, you can be able to, start identifying good stock that will do well and stock that won't do well, right? So start with ETF for a beginner, all right? But a smart investor don't just invest in ETF. We combine the two. All right. We combine both ETF. But for someone that do not know left from right, it is important that just start with ETF. So the next question is, what is your investment strategy? For beginners, there is a myth that, you know, your investment should be 60% ETF or 40% individual stock. But for someone that is beginning, it is advised that you start with 70% of your portfolio should be ETF for someone that is beginning. All right. It's only when you know your left from your right in investing that is when you can, up the game. But you should be able to sit down and ask yourself, which, what is my own strategy? Do I want more ETF in my portfolio or do I want more individual stocks in my portfolio? So, if you have been able to decide which should be more in your portfolio, this will now be your own strategy to be a guide for you. So that if a particular instrument is doing so well, there is a place where you have to take profit. And this is the part I said I'm going to be talking to you about how I make money from investing in the stock market. And you too can leverage on this strategy. For instance, if my own portfolio is 60% individual stock and 40% ETF, and I have a particular instrument that is doing so well, I have few instruments that have done like 52%. Like I checked this morning that's done like 52%. What am I supposed to do? I can't leave that money there because the stock market goes up and down. So when a particular instrument has done so well, what you're supposed to do is to take the profits. Two things you can do when you take the profit. Either you keep the money back in your own wallet and leave it until the instrument drops, you buy another one and enter the market. Or in your portfolio, you have other instruments that are not doing so well, like the stock market or that particular instrument has gone down. There is a bullish in that particular instrument. You take that profit and invest in the instrument that is currently not doing well. With that, when the instrument comes up, you can take the profits and balance up on the other accounts. That is how I kind of makes make money on the stock market, all right? Especially if this particular strategy makes a lot of sense if you invest in instruments that are very volatile. This strategy makes a lot of sense because for instruments that are very volatile, they will always go up within 2 weeks, they will drop, or even a month, they can go up and drop. So if you're very strategic in the market, you don't allow that profit that has been made to just go. All right. You take it when it's down, you use the profits and enter the market again, and the cycle continues. So, so I will explain this way now. So simple rule is that you have a target of 20 to 30%. So what it means is that if an instrument does 20% for you or 30% for you, you take profit gradually. Because if you don't remove that profit, it will go down, it will still come up. But what if I take the profits and once it goes down, I'm able to use that profit and enter the market for as a fresh buy, right? So now let's break it down this way. So you have an instrument of, let's say, $1,000 and it gave you 30% profit, which is 1,300. Your capital has to be there. Then your profit, which is 300, is pulled out, or you take half of it. Once the instrument goes down, or you use that to balance up other instruments. Because don't forget, I said earlier, if my own strategy is 60-40 and my instruments or my portfolio is now doing, for instance, my individual stock is now on doing 70, which is outweighing the ETF. So what I will do at that point, which that is the part I'm going to be talking about, balancing of your portfolio. So you don't allow a particular instrument to be so high in your portfolio. If not, once there is a downturn in the market, you're going to lose that profits that you have made because you are so greedy not to remove it. Right? So even a good plan can become risky if ignored. So rebalancing, adjusting back to your plan. Your plan should be will be a guide for you, not just how the market is doing. If the market is doing so high on this and on that, you try to redirect the market to how you want your portfolio to be. You don't just allow your portfolio to make decision for you or the market to make decision for you. You are the one to decide on how you want your own portfolio to be. So 70% ETF, 30% stock. And later, your stock grows 50%. Your stock becomes 50% of your portfolio. What are you supposed to do there? You remove 20% of it and pull it back to your ETF because why? Your initial plan was 70% ETF and 30% individual stock. So this is how we rebalance our portfolio. And this one can be done either quarterly, you can do either quarterly or once in 6 months. But you have to be strategic about that. And if you invest in very volatile instruments, you have to be mindful because the market can push high today and in the next 1 month or two, nothing is happening. So this is why you have to be smart about that. So you review every 6 months or 3 months, or as the case may be, depending on the instrument you are investing in or you invested in. So you reduce what has grown too much. So you add to the one that is lower. That is rebalancing your portfolio. So rebalancing quietly forces you to sell high and stay disciplined. You don't allow greed that this stock is doing well. It will go, it will keep going to make you lose money. All right? So common mistake to avoid. No plan. You don't have an investment strategy. What it means is that anything goes. If you watch on YouTube today or on TikTok or Instagram and you're told this particular instrument is going to be doing well, your money is there already. This particular instrument is going to be doing well, your money is there already. And beyond the ETF and the individual stock, beyond the ETF and the individual stock, for those on YouTube, I'll be answering your questions soon. Just hold on. Welcome. Okay, so I'll be answering your question for those on YouTube. Just give me a little time. All right, so common mistake to avoid. No plan, no investment plan, no strategy. Panic selling. Or just told you, oh, the market is going to be crashing soon. You started selling off. By the way, right now, the market is actually shaking head. So it's kind of, if it goes down by Monday, Tuesday, if it goes in the same pace, that means the market can be down to have crashed. So just for you to know. So that's why if you see your portfolio right now, apart from the portfolio, the instrument that has relation to do with energy, gas, petrol, that is the instrument that is doing so well right now. Other ones actually crashing. So panic selling, overchecking portfolio. So every day your eye is there to see how he's doing. My friend, that is not gambling. Investing in the stock market is not gambling. If you are investing in the stock market, allow it. Another thing is for the dividend paying instruments, they pay you dividend instead of you reinvesting the dividend, you're using it for something else. Your dividend should be reinvested into the stock market. Okay, so advantage for those that are watching on YouTube, I'm going to be sharing a screen. I'm going to be sharing my screen so that at least that will answer the question I'm getting on YouTube. All right, if you're on YouTube, if you can see my screen, can you just comment? Let me see. Can you see my screen? Okay, thank you. So this is the one I talked about, where I mentioned word simple, right? So I'll just use word simple. for this analogy I want to make here. All right, so we okay. So this is well simple. All right. And to open an account in West Simple, what you just need to do is to go add account. And when you scroll down, when you come to this place, when you go to add account, you can be able to see different kind of accounts they have there. All right. So different kind of accounts for checking, you want the checking account, for TFSA, for non-registered account, you can be able to see it. Then we have RESP, we have joint RESP, non-registered margin. Then we have RRSP. So there are different accounts you can open here, all right? So when you go here to open this account, you just need to click it. You want to open a TFSA. I already have a TFSA, but let's assume I want to open a TFSA just for me to click and I'll be able to see that, all right? I'll be able to open an account from here. And it just for, they'll ask you your SIN and some information. You'll put that in and voila, that is it, all right? Okay, Tobe, did I answer your question? I'm going to be answering the other part of the question. So what it means is that if once I'm able to open TFSA, okay, the next thing is I have to come in to buy an instrument, whatever I need to buy. So now see, there is, okay, I click the TFSA, there is self-direct investing, there is portfolio. Portfolio means you want what simple financial advisors to manage your investment. And you're going to be paying them for managing your investment. It can be 0 point something percent, it can be 1%, depending on, but I think it's around 0 point something percent. So they will manage it for you. What you just need to do is be putting money in the account and they will manage the investment for you. But this self-direct investing means you want to invest by yourself. You don't want them to manage it for you. All right. So you put money and you are the one that will choose the instrument that you want to invest in. So we have high interest savings. Now, when you put in this interest savings, when you put money here, it won't be invested, but it will just be like a savings account. All right. So then they also have the income portfolio. Now, there's alternate investing. Let's assume I want, because which is one I have, the direct investing. And I go next. I don't open a new one, but I go next. I can be able to see, they'll ask me for my SIN, address and all of that. I will input all of those information. And that is it. I hope at that point, I now have a TFSA. Okay. So there are also other ones that you can invest in, which is because I already have those ones open. That's why I'm not seeing. Okay, I think under all accounts, I can be able to see more. Okay, you can see LIRA, RIF, other kind of accounts. So there are different kind of accounts here. Even your first home savings account is also here. All right, so you can be able to you can even open a USD savings account here. Okay, so this is how the word simple is for those that want to open accounts with them. Now, if you want to invest, if you look at the right side of my screen, you're going to see holding. What it means is that these are my instruments I am holding. All right? These are the instruments I'm holding. So whatever account you have, it will show here on the left side. On the left side of my screen, you can see direct investing with sync complete. I've not completed that. So my checking account, checking emergency account, portfolio, a line of credit. So what it also means is that if you have an account with Wealthsimple, as you keep investing in your portfolio, it will get to a point where you have access to line of credit. All right. So depending on how much you have, you'll be able to have line of credit where I think this percentage is around 4 point something percent. You can be able to utilize that, put the money out and use it for investing. Or once you have an issue, you want money urgently, you can put money from there and do whatever you want to do. It's just the same like when you have um what's it called? This home, I've forgotten the name of the account. When you have property, oh, what did I forget this? I'll remember it later. So it's equivalent to that when you have property line of credit, home equity line of credit. Thank you. Home equity line of credit. So it's similar to that. All right. So because you already have your accounts, when you open this account, your portfolio become the collateral for this. So this is how that works. Then my TFSA. So then RRSP, joint RESP. So this is for children's education and non-registered margin. Then crypto accounts. So these are different accounts that you can open in Wealthsimple. All right. I need to get your questions while I try to answer uh top on YouTube her question. So if you want to invest in ETF, what I'm supposed to do is to come, we're gonna do, okay, come to search. I mentioned one of the ETF when I was presenting as VOO. So you come here, you type VOO, you see Vanguard S&P 500 ETF. So you open it. So this is a USA instrument. So when you open it, you come to the right side. Remember, when you open this on your phone, you won't see the interface this way. All right. So just so that you know. But the interface, I actually prefer it in phone most times. So this is buy. If I come here, so price, for instance, if you want this particular instrument is $602 per one share. So per one, for you to buy one share of this instrument is $602. What if I don't have $602? And don't forget, this is in USD. If I don't have $602, I can actually buy what is called fractional shares. Fractional shares, what I need to go is I need to go to market buy. So under market buy, I will put the amount I want to. Sorry. So come here, put dollar. I will put the amount. If let's assume I want to buy that for 50 USD. I can put 50 and it will estimate how many shares it will give me for this amount. So that you don't have $100 or $600, it's not an excuse not to invest in the stock market. You can invest in the stock market with any amount that you have, with any amount. It can be even as small as $5. You can invest in the stock market. Let's assume I have $5 to invest. You can see here it's giving me 0.0083 shares. That's the estimated shares I have with Vanguard if I commit this. So once I come here, it will show me on different, it will list the account I have. I need to select the particular account I'm buying it. And voila, that is it. So what it means is that this particular market buy here, immediately you click it, it will commit. What it means is that the transaction will be concluded immediately under market buy. Now, if I want to bargain with them, I have the money, I want to bargain. So what I need to do, I need to go to limit buy. So they said here, you can see on the right side, $603. Under it, you see bid, 602.06, ask 0603.00. So as someone that have money, I want to negotiate with them. So what I would do is that I say, I'm not buying this for this amount. I want to buy it for 598.1. This is amount I want to buy. So they will ask me how many shares of this do I want to buy? I say I want to buy five. Let's say three. So they will give me total estimates of how much the total as in 598.10 multiplied by 3. This is the total. So the next thing is, it's not showing me next here because this amount is not what I have in my account, right? But assuming I have this amount in my account, it will show me next. And I will select the account and I'll be able to commit. So once I commit this, the instrument will not automatically buy. It will be on the waiting list until this particular instrument hits 598.10. Then the system will automatically buy it for me. So that is how uh, limit buy works. Okay. So when you invest in the stock market too, you can also set that, okay, at certain percentage, I want to take profit. All right, let's go to YouTube and see the questions over there. Please drop your questions, all right? If you have one, drop your. Let's see how many we can be able to answer. What am I? Okay, so starting with the first question you asked, when can I buy ETF? You can buy ETF even while this session is going on, all right? You don't need to wait for anybody. You don't need anybody at all to be able to buy ETF for you. You can buy ETF even right now. So advantage of investing in ETF, just like I said, if we have to compare that to invest in individual stock, ETF is way more easy and more simple to invest in because it takes the stress off, you trying to scout for a particular uh stock to invest in. All right. That is why ETF is kind of more simple and easy. And it's more steady. It doesn't fluctuate like, we are not seeing your screen. All right, sorry for those in Facebook. you can search the tribe cycle. I'm giving that detail is can only be found on YouTube because we are streaming on different platform. Please, if you can search the tribe cycle on YouTube, you can be able to join in on YouTube and be able to see the screen. All right. I'm sorry for that. I mentioned that earlier. Okay, so that is so that is the first question. I think I answered that. You can be able to invest anytime. You don't wait for anybody. The advantage is that it's more steady, more stable as compared to individual stock. All right. Then when you invest in particular ETF, it's a basket of different companies. So for instance, if you want to invest in Apple, Amazon, what have you, you can just buy one ETF that, houses all of those different instruments in one particular go. All right. So with that, you have access to different stocks. Okay. You have access to them. Now, we said, what is the meaning? What is the full meaning of ETF? It's called ETF is Exchange Traders Fund. All right. That is the meaning of ETF, the full wording. Their abbreviation stand for Exchange Traders Fund. So next question is, what am I going to get if I buy it? Okay, what you're going to get is that you're going to get investment. That is a simple answer. You're going to get investment. You're going to be investing in the stock market. That is what it means. It's better to invest in the stock market than just leaving your money in your bank account doing nothing. All right? It's better that way. And by the time you invest in the stock market, the compound interest sets in that over time you have cumulative benefits. All right. So with that, you will make more money. By the time you compare how much you have now, as in your when how much you have in your savings account in the next 20 years, for assuming you are saving $20 per month and the same $20 in ETF, the ETF will always outweigh the savings account because savings account can give you some 0 point something percent in a year or 1 point something percent in a year. But most ETF has proven to give back a return of 8, 9, 10, 11, even up to 12% in a year. So by the time it gives you, let's assume it gives you 12% in a year, and the same amount is reinvested for the following year, which is another 12%, and it goes on like that for 10, 20 years. You will say that you would have made more money as against just having your high savings account giving you is 1 point something percent, 1.2%, something account even give 0.1% and what have you. All right. So I hope I answered your question, Tobe. Okay. Another question? Please, if you have one, drop in the chat. So for those in Nigeria, I'll just, because of the question I got here, I'll just add this. For those in Nigeria, you can actually invest in the stock market by opening accounts with, there are different platforms which is online, like the digital platforms, like you don't want to go to the bank to go and, queue up to go and do whatever. You can invest in app like Bamboo. So Bamboo is one, Trove is another one, Chaka, Rice Vest is another one. So these apps, you can download them. They will ask you for your BVN. I think it might even ask you for NIN, I don't know. You put all of those details, do your KYC. Once you do your KYC and it's approved, you can be able to invest in the stock market. Now, there are also organizations that are kind of established just like the way bank is. We have the Afrinvest Securities, the United Capital Securities, the Stanbic IBTC Brokerage, Cardinal Stone Brokerage Security, Mary Stan Securities. All of these are also running just like bank in Nigeria for those in Nigeria. All right. So you can walk into any of these organizations and just say you want to open an account with them, and they can be able to open accounts for you. But if you don't have that time, you just want app, do your online stuff, just download Bamboo or RiseVest, any of these other app I mentioned earlier, and you can be able to invest. And mind you, the amount you have is it's not important now. Sorry to say it's important per se, but it's not a determinant to whether you should invest or whether you shouldn't invest. You can invest with as small as 50 naira, 100 naira, 500 naira. As small as for those in UK or Canada or so, you can invest with as small as 10 pounds, $10, as any amount at all. I've been able to establish that for those that are on YouTube to see how I demonstrated that you can be able to say that the amount you have is not a problem, but the problem is you that choose not to invest. Most of us are waiting to see when we have all the money uh, hands down, like you want to have like $50, $100, $1,000 before you can be able to invest in the stock market, which is not supposed to be. You can start up at any time and watch your portfolio grow. All right. Your portfolio can grow with time. Another strategy I advise people once they have interest in investing in the stock market is when you take your pay, if it is $10, if it is 100, or let us say 10% of your money, after giving your tithe 10%, you move on that 10% and just put in the stock market. All right? Put that in the stock market and be consistent with that. The issue is you put now, you invest now, you don't want to invest tomorrow. Don't want to invest tomorrow. That is the problem. But if you can be consistent with it, you'll be shocked at what you're going to make in the near future. If you can be consistent with it, you are going to be shocked what you're going to be getting in the near future. So plan as much as it lies in you to be consistent in the stock market. So, Tobe, did I answer your question? Do you have more questions? Please, if you have questions, drop it. Let's see how to help in answering that question. So that if it requires us to do a live demo, we can also do a live demo so you see how this works. It's not supposed to be difficult, all right? It's not supposed to be difficult at all. Investing shouldn't be difficult, or putting money in the stock market shouldn't be difficult. It's as simple as ABCD. So I have a question for you. So if you have $1,000 in the stock market today, or let me rephrase that. If you have $1,000 today, what would you be investing in? If you have 1,000 today, what would you be investing in? Okay, Tolu is asking, sorry, Misha is asking, is there a starting amount? No, there is no starting amount. All right. The only thing you need to do, just open your brokerage account. Open the account, like what you can see on my screen, and you're good to go. Once you open the account and the account is approved, after you put in your SIN, for those in Nigeria, BVN, NIN, and your social security number, once the account is approved, you can start with any amount. Any amount. All right, I will demonstrate this again for those that just joined and then follow up from beginning. What just happened? What just happened? Okay, so I will demonstrate this again for those that just joined. Sorry, I'm trying to, I don't know, I want to go and close one of the app I was using. What I've done. Okay, so let's assume that I have $50, right? So make sure this is for you. Let's assume I have $50 and I want to invest in the stock market. Please, if you can see my screen, kindly comment. Let me be sure that we are together. Can you see my screen? I don't know, I'm not seeing my screen again. Okay, so now if I want to invest $50 on this particular instrument, the Vanguard S&P 500, this is only $50 I have. What you need to do is come to market buy and put here under buy in, you're going to see two information, which is one is shares and the other one is dollars. Click dollars and come to the dollars, this place where they wrote dollars here, and put the amounts that you have. Let's assume you have $50. Click that. So the $50 gives you 0.0829 shares. So what it means is that if you commit this and if you commit this to buy this instrument, the amount of shares you're going to buy is 0.0829. So this is called fractional shares. It means it's a fraction of this one, or the fraction of one that you are buying. So even with the fraction of one, you are still a shareholder to this company. All right. So you can start with any amount. That is just what I'm trying to communicate. You don't need, let nobody fool you that it has to be this amount. You are the one that sets target for yourself. Okay, in the next 1 year, this is amount I need in my investment account. In the next 2 years, this is amount I need in my investment. This is how much I need. Just like when we started in the year, our first session this year, we talked about budgeting. And in the budgeting session, one of the things that we discussed was setting an investment goal for yourself. Have an investment target, how much you want to invest in the stock market. So once that is defined, how much you want to invest in the stock market in the year 2026, let's assume that, okay, at the end of this year, I want my investment to be $40,000. That becomes your investment target for the year. So you can now divide that by months to see, okay, how much would that give you? No one is under pressure. No one is putting you under pressure. You're actually the one putting yourself under pressure, if I'll use that word. All right, to say, okay, this is how much I want to invest in the market. So it's for you now to strain yourself to ensure that you achieve your goal, because it's not my goal. No one is investing for you. You are the one investing for yourself. You are the one making your decision. So you have to decide this is how much I want in my own portfolio. You understand? For the year 2026. And once that is defined, the rest is history. All right. So hope I answered your question. So please start today. Don't wait till tomorrow. Don't wait till tomorrow. Start today. Procrastination can make you lose money. Procrastination can make you lose a lot of money in the world of investing. So please don't wait tomorrow. Start it today. Can someone say start it today? Please type it down there in the chats. Please start today. Start today. I mean you I'm talking to. Start today. Don't wait till tomorrow. All right. Let me check if I have another question. Okay, the name of the platform I just use is called West Simple. Okay. Uh, I will drop the link to that. Please, for those in YouTube and TikTok, if you have a question, just drop it down. We're able to see how to help with the response. So, so there's a pin message. You can, if you click that link, Simple will give you $20 for using that link to invest with them, right? So you can open your account with them and you start to join off investing. And one of the reasons I'm not advertising, Simple didn't pay me for this conversation, right? But if I like it, I like it, and I'll talk about it. So one of the reason why I like it is it gives me the leverage to be able to connect my wife's account and my account together, and I'll be able to see our portfolio grow together. So what it means is that I can click on family and be able to see how much as a family we have in investment. All right. But on the other platform, I've not seen that. Might be there, maybe I don't know. Any other question? Please feel free to ask your question. And please, if you're on the live, please give us a thumbs up, all right? If you are getting value from this session, give us a thumbs up. That's the only way YouTube can be able to share this video with others to learn like you. Okay. So I asked earlier, so if you have $1,000 today, where would you invest? What would you invest in? If you have like $1,000 today, what would you invest in? So while you answered the other question I asked, The next question is who is ready to start investing? Who is ready to start investing? Let me see. Cancel link. Michelle actually answered you on YouTube, so you can look at the response I gave on YouTube. Okay, I'm here to answer your question if you have one. Okay, so like I said, please give us a thumbs up. Give us a thumbs up. We have 12 people watching right now. So please, I need to see like 12 thumbs up. All right. Investing shouldn't be that difficult, actually. Then there's another thing I also want to share. For those that follow that are friends with me on WhatsApp, must have seen me post something like this. This particular organization is Dollarama, and I made a post about them yesterday. I don't want to give the details here, but you know what to do. But one thing I need you to take here is you can, if you have a particular instrument that's of interest to you, you can add to your watch list. So on the right side of my screen, you're going to see something like a star. So you click it. There are some features that are in the phone, but I'm not going to be able to see them here, right? So this, once there's any news with them, you can be able to see that. But on the phone, once you click the watch list, it will take you to a place you can be able to put the amount that you want. For instance, if you say notify me when the drama is 175. So if the drama reaches 175, even in the next 1 year, the system will notify you that the drama is 175. So I've been following up the drama for a while. When I pinned the drama on watch list, it was 183. See 183 or more. No, it was how much? All right. I have to do advance before I can be able to see the details. So when I checked the drama then, it was 200 and some $210. So when I did my analysis, I saw it as a peak. So I told myself wouldn't want to buy the drama at 210. So I set notification for the drama at 180. Okay, I set one for 185, the other one for 180. So yesterday I got a notification that the drama has hit 185. I said no, it's still coming down. Few hours later, it got to 180. And right now it's still around 180. Right? So you can set a notification like that for any instrument of your choice. That's okay. If this instrument get to this amount, give me notification. So what it means is that once the instrument hits that amount, it's a buy time. So you don't just go and buy all because you have money to invest in the stock market. No, you have to be strategic about them. You have to, know when to enter the market so that you don't enter markets when people are finished taking their profits. They're going to stay there for a very long time. And if you want to leave, you might have to sell and lose money. You understand? So this is important. Knowing when to enter the stock market and knowing when to leave if necessary. Do I have any question? Okay. As you buy stock, how will it help my savings or investments? I have never invested before, so I want to know. Okay, so how will it help your savings or your investments? So there is a video on our YouTube platform where we talked about compound interest. I think that was that December or so. I'm going to be tagging the video or maybe send a video. You can be able to look at it. We did the compound interest tree to see if you invest in the stock market now in the next 20 years, in the next 45 years, in the next 30 years to see how much you're going to get, all things being equal. All right. So, but once you save money, you put money in your bank account, the money, the bank will be using your money for a business. So your money will practically make no profit for you. All right. Apart from maybe if you put in high yield savings accounts, you're going to get maybe 1 point something percent in a year. So once, let's assume they are giving you 2% interest rate. So this is for 1 year. So divide that by 12 months. You're going to get 0.00, 0 point something percent. All right. So this is what you're going to get monthly. But when you invest in the stock market, you are going to make money from one, keeping your money there. Just like, okay, let me break it down this way. You go to Costco, you go to Costco to buy goods. So when you buy stock in the stock market, let's assume you buy Costco. Costco is also in the stock market. So what it means is that even as a customer of Costco, you co-own Costco. You are also one of the owners of Costco. That is the meaning. So anytime Costco make profit, if it is a dividend paying organization, anytime they make profits, they also give you part of the profits they make for being their co-owner or for being one of the person that gives them money to run their business. All right. So that is one. So you make profits by dividend. You also make profit when the instrument grows. For instance, I bought a stock at $23 per share for one. But right now, the same instrument is selling for 30 something dollar per share. So that is to say I've made almost like $10 per share. So now imagine if I have like 2,000 or 4,000 or 40,000 shares of that particular instrument. So multiply by the $10. So that is another way you make money. Now, there is another way called option trading. That one is more advanced, which is, let me not break your head with that now. But that one is also another way you make money from the stock market. All right. So now, like I said, when I started, investing in a tax savings account helps to shelter all of the profit you make so that government will not have to come and ask you to give them their own share from the profit you make. So that is why TFSA is recommended for you as a first call when you want to invest in the stock market. All right. So that is how it works. So once you open your TFSA and put money there and start investing, whatever profit you make is tax free. It's not tax. Government will not ask you to bring some of the money back to them. All right. So, okay. So, Tope, the best thing I can do for you is I've answered your question, but if it's still confusing, there's a video I'm going to be tagging. I don't know if I can be able to search that video now. I think our last session, we even confused you more because it was more of technical analysis. But session on the January session will be more beginner friendly for you to learn from. All right. But just know that when you invest in the stock market, the intention is to make money as a business person. That is the main reason you're putting your money in the stock market. All right. It's not gambling. It's not a get rich scheme, fast scheme. All right. It's something that is more stable. But between the stability now lies between individual stock and ETF. ETF is more stable as compared to individual stock. Individual stocks are more volatile. But also know that when an instrument is more volatile, the profit margin will also be higher. Once a risk level for an investment is high, the profit level is also going to be high. But once the risk level is low, definitely the return might also be low. All right. So that is how this thing works. Madam Choma asked you a question. Mhm. So for if for those investing in their ETFs and you are investing in a US instrument, if the instrument you are investing is a dividend paying instrument, you're going to be paying 15% VAT or withholding rather to the US government for every dividend they pay you. But if you invest in US dividend paying instruments, US government will not charge you 15% withholding if it is invested in your RRSP, all right? But if it is invested in your TFSA, they're going to pay 15% every time they pay you dividend. You're going to return back 15% to the US government. Please take note of that. All right. Any other question? Any other question? So the barrier to investing is not money because we are able to demystify that money is not a problem in investing. All right. It is information and action. You have to choose to take action. If you want to invest in the stock market, take action. Don't wait until you have all the money. Start now. Start small. Just start. What do you mean? It is just start. There is no better English than to just say start. Any amount you have, start. Don't wait until you can figure all things out before starting. So to help Tokpe here, when you invest in RRSP, I mentioned this earlier, but I don't know whether you took note of it. That's what we call tax defer. So it's kind of going to be shading your tax. So when you invest in the stock market, so once you put money in your RRSP, and the money is not going to automatically go to the stock market. The same with your TFSA. So you put money in your TFSA, you transfer money to your TFSA. you add money to your TFSA, the money is going to be there just like your normal savings account. So you are now the one that will invest that money to the stock market. And the money will start, even your RESP, that is your children's education savings account, that money should not be lying in the account doing nothing. All right? That money has to be invested. Your first home savings account, that money should not be lying in the account doing nothing. That money should be invested. But the only thing I recommend for those that are investing their first home saving in their first home savings account, if you plan to buy a property soon, only invest in ETFs because it's low risk. All right. For those that are investing in their first home savings account, for those that are investing in their RESP, you have like 20 years or so before your child comes to use the money. So you can actually, you know, blend it for between ETFs and individual stock. But for your RESP, TFSA, FHSA, whatever the account is, please don't keep money in the account doing nothing. Invest the money. You ask me, okay, what are for RESP? If I invest the money, will government still add the one they're supposed to add? Government, as long as money drops in the account, government will always add what they're supposed to add. They won't say because you invested the money, because of that, they won't give you. No, that's not true. Mayor, I cite you. All right, so this is how the stock market works and the different accounts. All right. So for the fellow that asks how they can be able to lower their tax next year, because the tax window the sheltering sheltering window for your tax is over. So for this year, for the last year's tax, which is going to be filing which we are filing now. But for those that are preparing for next year, this is how you can be able to shelter, because for your window, you have a window which you must not you must not exceed that window. You can check your CRA to get the details of how much is your window and ensure that you invest within that amount. All right. So ensure that you invest within that amount and mask it if possible. If it lies in you, please mask it. Because once you mask it, it's going to be lowering your tax for the next year. Another thing too is what people don't know about CCB or child benefit, child support can also be tied to this. When you have a tax shelter and they're assessing your how much you're going to be paid, which you're going to be doing, I think around June or so, they will see you that you are low income. But if you don't mask your RRSP, your tax bracket is going to be high, which is going to reduce how much government is going to pay you for your child support. So this is why it's important to always try to mask your RRSP for you, for your wife. All right? Because government at that point, government sees you and your wife that you guys are in the low income bracket. And that might even aid them to even pay you guys more if you have many children. So please take note of that. Henry, I can cite you, sir. How are you doing? All right, so this is all there is. Unless I have a question on investing on the stock market, I'm ready to take more if there is. But if there is none, we have to end this life and go back to Zoom with my team. All right, for those on your Facebook, thank you so much for joining us today. We're going to be calling it a day. Please try and join our session next time. Have yourself a good day. God bless you. So for those on TikTok, thank you so much for your time. I'm going to be zooming off now. It was nice having you. Have yourself a good day. Okay. Thank you everyone for those that was able to join us today. God bless you all. We have my team join me back on Zoom for performance review.